Hi, everyone, and welcome to another episode of Living on Blockchain. Today, we are speaking to Aly from Blockchain Founders Fund. He's the managing partner there. They invest heavily in early stage Web3 startups. He's also a limited partner at Loyal VC and Draper Goren Home. Aly consults organizations on emerging technologies as he's also working with the UN in trying to build solutions which are at the intersection of technology and help out in elevating poverty. He has served as a senior blockchain fellow at INSEAD as well, and he has been recognized as a global leader in the blockchain space. He is an acclaimed author as well as a columnist, and he has worked basically extensively at both ends. He had a startup at some point, and now he's an investor. This was a highly insightful conversation, talking a lot about how Blockchain Founders Fund helps entrepreneurs reach and build on their vision, and also his own thesis regarding where the market is heading, the kind of spaces that are doing well. So for all builders out there, especially, I think this would be a very insightful conversation. I can't wait for you guys to hear this. Let's deep dive right in.
Thank you so much for joining me today. How are you doing, Ali?
Fantastic. How are you?
I'm doing wonderfully well. I'm so glad that we could make the time to speak to each other finally. This comes after a bunch of reschedules, some from my end, some from your end. But I'm just really grateful that you could make the time.
Absolutely. My pleasure. And thanks for having me on the show.
So you have an impressive background with extensive experience in blockchain, venture capital and technology. Can you tell us a little bit more about your journey and how you got involved in the Web3 space?
Yeah, absolutely. I mean, it's been quite the journey, let's call it that. Lots of up and downs.
Hmm.
But I think it goes back even to the way I sort of grew up. And I think one of the big things when people saw Bitcoin, fairly early on, I think a lot of people were turned off by it, didn't understand it, didn't understand the potential. And I think what was maybe different in sort of my case specifically is, I grew up in Vancouver, but my parents are actually refugees from East Africa. And I think that really shaped and helped me understand like instability in the world, instability in regions, understanding, how things can sort of get taken away from, just poor monetary systems, things like that. And, Bitcoin really changed that narrative, right? And it sort of underscored what happens or what sort of could be the counter to, governments that are that have poor sort of economic systems designs or just taking advantage of their central banks, et cetera. And sort of after then getting involved sort of on Bitcoin, ended up launching a startup later on in the Web3 space. So that was in 2016. We started an exchange at the time. We raised a few rounds of capital, grew our team to 40 people. And after exiting that, ended up starting Blockchain Founders Fund. So since 2017, we've been running Blockchain Founders Fund. So it's now 7 years. We have got over 130 portfolio companies. So if we fast forward, right, that's a lot of companies that we've backed, a lot of incredible founders that are reshaping, the space and reshaping sort of the way that the industry and even the world works.
That's wonderful, and that's quite an impressive portfolio of number of companies that you guys have invested in. So let's delve a little bit more into that. A little more into Blockchain Founders Fund. What kind of inspired you to create it, and how does it differentiate itself from other blockchain ventures that are actually exclusively investing in Web3?
Yeah, so I mean, so just sort of to make sure I sort of got the question, you're sort of asking about companies that sort of exclusively invest in Web3 and sort of why. Is that accurate?
So yeah, you can cover that, but what I do want to know is how did you sort of get inspired to launch this? Because you were working on your startup earlier, like you mentioned, and how do you differentiate yourself, or is there a USP if the founder is sort of going with your fund when they are looking for investment?
Yeah, it's a good question. So, I mean, there's definitely a big differentiation, right? I think most founders that have raised capital before would know that, a lot of VCs don't necessarily, add value, help open up
Right.
doors.
Yeah. It's dumb money.
Founders, yeah. Well, I mean, it's not necessarily, I mean, I think there's still different classifications, right? But I think there's still a big difference in the Web3 space where, being able to have someone to open up doors, whether that's like, exchanges, market makers, a lot of like very strategic backers in the space or leading funds in the space, et cetera, that, you'd want that sort of support to open up those doors, or even when you think about like rolling up sleeves and figuring out go to market, et cetera. I think those are sort of very critical aspects. And so, that those are the types of things we do with our companies, right? So even with the vast majority of our companies, we'll end up driving and supporting this in terms of like helping to bring in a lot of co-investors, helping to, bring in customers on the product and driving up revenues, and sort of key partnerships. So those are sort of all of the areas that we get involved in, for the most part, right?
Absolutely. I think I concur there. So that is perhaps your major USP when it comes to attracting great founders.
Absolutely. Yeah, so those would be the key things. I mean, also there's always going to be areas where like, companies need support on, key hires, stuff like that, which are the things we get involved in. I mean, one of the things we pride ourselves on is we want to be the first place where founders come to when they have a challenge as well, right? So if you like what you oftentimes see is founders are sometimes like nervous to go to their investors, let them know about challenges, but we don't want our founders to think of us as their investors. We want them to think of us as their partners, and like we just roll up our sleeves with you and figure out how to solve it and move forward, right?
Yeah, absolutely. So, you guys have a venture building approach, right? Can you elaborate on how your go-to-market focuses more on the venture program that supports entrepreneurs, especially those navigating the complex landscape of emerging technologies like blockchain, Web3, and metaverse? These are all newer sectors that have, relatively newer sectors that are there. And how do you kind of stay ahead of the curve, and how do you make sure that, you're able to help these founders with their product market fit and their go-to-market?
Yeah, so the venture program sort of applies in some cases on investments for us, right? So when a founder's like very early on in their journey, if they sort of we see still a lot of gaps where we can support them, but we see a lot of very strong strengths on the company where they already have certain parts covered really, really well. Like those are sort of aspects where it makes sense on the venture program side. I mean, we do also invest in a lot of startups that aren't part of our venture program if we think that they're extremely strong, and there's just smaller things that we can support them on to sort of help supercharge, right? So there's sort of both aspects. In terms of where we sort of see founders fitting that. We got a lot of really great founders that bring incredible credibility from traditional industries, but that really like the Web3 space, have been involved a little bit in the Web3 space, and then we can sort of help to supercharge that, help them navigate this space, help them sort of like get this off the ground, or sort of supercharge in that way. And so that's kind of where the venture program really falls in. I mean, in addition to that, we've got about 150 corporate partners that support our companies. We've got 350 experts that support our companies. And so that's where, we see sort of the big impact there.
Wonderful. So it's a very hands-on approach that you guys basically undertake to help the entrepreneurs get things off the ground.
Exactly.
Brilliant. So, your fund emphasizes basically, it focuses a little on early stage investments, right? Could you share some insights perhaps into the key areas or sectors within the blockchain space that you find very promising, where you see significant growth potential?
Yeah, so those areas, change a fair bit, right? So, if we go back to 2017, some of the areas that we're focused on are no longer sort of as relevant or as much opportunity anymore as there was before, right? And so, we do have a pretty fluid set of thesis. We have about 25 open thesis right now, or sub thesis, that we think there's major problems in the Web3 space and no market leader or big opportunities. And so the areas that we're looking for companies in as well does change over time, and depends on sort of what that market landscape still looks like at that point.
Right. But, I would nevertheless ask you, what particular sector do you feel is doing well and is going to do well in the coming months with this bull market?
Yeah, absolutely. I mean, I can share some of the recent sort of sub-thesis that we've
Right.
been interested in, right? So, I mean, we still see, some gaps on layer one infrastructure. If you take, say, like decentralized physical infrastructure, or you take, you could even take things like intents, which I can talk about, where we see sort of opportunities around even like real world assets and a layer one related to that, or things like this. There's definitely a number of different areas around that from a layer one infrastructure perspective. We do still really like tooling. We think that there's huge opportunities right now on still solving some of the challenges around, things like how do you develop more effectively or multi-chain layer, zero protocol, stuff like this. That we see opportunities on. And then some of the more recent sort of investments have been around the themes of like real world assets. So how do you fix problems of on-chain yields and bring sort of more stable, more exciting, I think, yield opportunities on Web3 or on blockchain. We've been investing in things around like decentralized physical infrastructure. So, that sort of allows people to then contribute to these networks more effectively that already have those resources. And then, intents is sort of more around, if X and Y happen, I want to execute Z. So it's kind of like based on certain actions that happen in the market or certain factors, then like I'd want to do some other action. And we think that's quite interesting. We think this has the potential to sort of start consuming OTC markets and other aspects within the Web3 space. We just invested in a really cool company that's doing, for example, liquidation protection. And so crypto trading is still a big use case for crypto as a whole. It's probably the biggest use case. And so we think that's an interesting one. But then there's all sorts of other ones that I'd say are more sort of like how do you bring sort of the traditional enterprises into Web3 more effectively. And so, we've invested, for example, in a company called Petastic that's putting pets on chain. They put about 1 million pets on chain now and building pet IDs. And this solves a number of challenges around sort of paper-based vaccine certificates and things like this.
Right.
So there's a lot of really exciting things, I think, in all of these different areas. And so, that's partially why, we've been so focused on a number of these different areas.
Wow, nice, wonderful. So I completely agree. I think the kind of use cases that we are seeing currently, they're very, very exciting because initially I think the technology itself is exciting for the builders and for perhaps people who are peering in from the outside. But now with these relevant use cases that actually are adding value to the user's life and they become, sticky in nature, that is I think that is like we are paving the path for mass adoption via this, and that is what makes this space so exciting at this time and date.
Absolutely.
Can you tell us a little about some success stories of the startups that you guys have supported, and if you could highlight like the growth of these tech startups, it'd be wonderful and very, very motivating as well for the other entrepreneurs who are listening in.
Yeah, I would be happy to. So, we, for example, in 2019, we were one of the first investors at the intersection of blockchain, AI, and gaming. And at the time, people thought this was a little bit crazy, right? And there wasn't really much investment into, say, like AI at the time. It wasn't like what it is right now, right? And especially when you start blending that with gaming and Web3, there was a lot of concerns from a lot of people. And we backed a startup called Altered State Machine. Altered State Machine had a lot of really, really cool things what they were doing. But, in particular, one of those was like, how do you bring uniqueness? If you think about uniqueness in the way that, say, like human DNA works and how humans are unique from one another,
Right.
and how do you bring that uniqueness into gaming? People just didn't get it, right? And we thought this was fascinating, and so we actually backed this right at the start. We're on the founding cap table, so we're literally from the day zero, and Altered State Machine ended up getting acquired for a pretty strong amount, about 6 months or so by Futureverse. And that's done really, really well for us. But it's been, quite the journey. I think it took a couple of years till people really started to figure out the potential here. And then it really sort of blew up, I think, over the last couple of years. We ended up launching the first AI football league with FIFA and a number of other really incredible partners. So that was, a pretty exciting one. Some other recent ones that I think are doing really well, and that, again, I think people didn't necessarily believe in the vision of the founder at the start. For example, one is Breshna. And Breshna is a superstar female founder who's out of Washington, D.C. And her goal is basically to build a platform where anyone can build a video game uh, in under 10 to 15 minutes. And, at the start when we backed it, there wasn't really many games made. But fast forward now, she's gotten about more than 150,000 games created. They've got about 2 million users that have played these games. And, you see how far it's come is sort of, night and day. But she's ended up with a lot of really incredible backers, from Paris Hilton to Randy Zuckerberg, a number of other sort of heavyweights on her cap table as well now. So, when you back a company that early and then you start seeing sort of the journey, and you actually see the things that were sort of in that vision come to fruition, and some of it, even a lot faster, a lot bigger than originally expected. It's quite nice to see in sort of a fairly short timeline.
Absolutely. I think that is that is the payoff, right? And it is very, very exciting to be able to support a startup that is doing great things. Obviously, initially when they do, it's a bit of a educated gamble that any investor or even a founder takes. But when it does well, and all the blood, sweat, and tears basically adds up to some credible value that is being added to the end user's life, it's wonderful to see.
I agree, and that's why we do what we do.
Exactly. Yeah. So, you're actually involved as a mentor as well with several startups and Orbit Starts and mobile-only accelerators. How do you see mentorship playing a crucial role in the development of startups? And what advice do you often find yourself giving to emerging entrepreneurs in the blockchain space? And this would again help, fellow builders in the space who are just starting off.
Yeah, so I mean, I do think that mentorship's very important. And I think it sort of goes both ways, right? So I mean, there's
Right.
one side of the mentor, but I think there's also the side of the coachee, or whether that's the startup founder that also needs to be able to take this advice and then like sift through it, filter it, figure out like what pieces to keep and what pieces to not keep, right? Because
Right.
what you're going to realize as a startup founder, and any of the startup founders on here listening, I'm sure you'll know, you talk to 3 different investors or 3 different mentors, and they give you 3 different pieces of advice that are completely different, right? And
Yeah. Yeah.
part of it is, the coachability and like being able to take parts that make sense, or even understand what doesn't make sense and why they're saying it, and maybe like once you understand it, then determine, do you keep that or discard that? But it's important to be able to sift through it. If you listen to everyone, it's a bad thing, right? Because you're going to go in every direction and it'll keep changing. If you listen to no one, it's a bad thing, because that means you're probably not flexible. That probably also translates into not listening to your customers, which also creates other issues.
Right.
And there's some balance in the middle that sort of makes a lot of sense. In terms of certain piece of advice, I mean, I think there's all sorts of things, but if you're a founder out there that's raising, I think there's generally, I find a lot of gaps for founders that are first time founders that haven't raised before. And I think there's a few specific piece of advice I can probably give you. One, when you're trying to get to investors, I think one is just making sure that you've got like a very concise approach, right? So one, you can explain your what you guys do or what your company does, and we say in 11, 30, and 90 seconds, right? So those are the 3 sort of timeframes we think you should be able to explain your company in. If it takes you 20 minutes, like something's wrong, right?
Right.
You need to be able to explain it in 90 seconds. That doesn't mean you can't do a 30-minute or 20-minute call with someone or a meeting with someone, but it's essentially those are your modular talking points if you think about it, right? So like I think that's a very important part. I think the second piece that I see is like with pitch decks, these like very lengthy pitch decks are probably like 10 words per slide or something like that, right? It doesn't need to be crazy wordy. You should be able to get across what you're working on in a very concise manner. And, one of the misconceptions people think is, hey, you're going to raise money off your pitch deck, right? That's not what it's
Right.
for, right?